afternoon, everyone, and welcome to Stock Market Today. It's Coram and Shreve here with a breakdown of the action in today's session. And breakdown may be a fitting word here, Ken, with the broad market action we saw today. A lot of red out there.
Yeah, not a good close at all. NASDAQ down more than 3%. A really tough day for steel producers, solar stocks, software stocks, chip stocks. Everything got really hit hard today. But we have three things to look at today. First of all, an ETF, home building ETF, the ITB, iShares U.S. Home Construction ETF, ticker ITB, had a good day today. In the chip space, which endured quite a bit of heavy selling. Still taking a look at Impinj. PI is the ticker there, and also Cardinal Health, CAH. You wouldn't know it. There's a bad market going on with Cardinal Health forming a flat base above its 10-week moving average.
Yeah, well, we'll check in on all those charts. First, let's take a look at the major indexes. So, as you mentioned, Ken, the NASDAQ closing down over 3% today, 3.2% to be exact by the close. The S&P 500 down 2.5%. The Dow, its worst day in a couple of months, down 2.25%. Small caps also getting hit pretty hard here today with the Russell 2000 down 2.7%. So starting a couple of days ago, we got a negative sign, and it's really just gotten worse from there, Ken. We couldn't hold up on that CPI news. Fed didn't say anything promising, and now it looks like those recession fears were out in full force on Wall Street today.
Yeah, with bond yields going down like they have, and more weakness today as money flowed into bonds, clearly the bond market is worried about some softness next year in the economy. And you're right, the CPI data on Tuesday, I thought the market gave a pretty good tell because we got seemingly good inflation data that was much lower than October, but the indexes could not hold on to a gain and really gave back a lot of gains Tuesday by the session end. So the 50-day moving average has been a support level for the NASDAQ for quite a few weeks now, but gave up that support level today. Notice the volume, though. I mean, it is a little bit, we've been talking about this low volume environment for the stock market, and we had 2 days in a row of above average volume for the NASDAQ. Volume was heavy on Tuesday. It was also heavy again yesterday, but looks like we got lower volume today for both the NASDAQ and the NYSE. So once again, we avoided a distribution day, but this market uptrend definitely is under some pressure here.
Yeah, so not only undercutting these recent lows in the 50-day line, but now threatening to undercut the low of this gap up day on November 10th here, Ken, with that low being just shy of 10,800, the NASDAQ closing just above 10,800 here today. So we'd be further eating into that progress, but the NASDAQ's been the lagging index. So let's also take a look at the S&P 500. Once again, we will draw this trend line that we've been focusing in on. Some clear resistance at that level, just above the 200-day line, getting turned away, also undercutting its recent lows, and not yet below the 50-day. But the S&P now firmly below that 21-day line.
Yeah, really, the S&P 500 made no attempt whatsoever to hold above last week's lows. Some were thinking that was a possibility, and you can see the close just above the 50-day moving average. So not quite a test yet, but it's getting very, very close. So technicals weakening for the S&P 500 too, but as long as it's holding above its 50-day moving average, we'll hang our hat on that. But with this decisive break today, certainly it brings a visit to that 50-day line into play. At this point, we're really going to be watching for, if the NASDAQ does start to rally, is it going to rally in light volume and then, continue to fall in higher volume, or is it going to, rally in heavy volume and decline in light volume? So we're just still going to continue to gauge supply and demand here. But pay attention to wedging, where an index starts to creep higher in light volume, maybe giving a false sense of security. So we'll just watch price and volume from here. But again, the distribution day count relatively light. We have 3 on the S&P 500 and only 1 on the NASDAQ. So a little more distribution on the S&P 500, but holding above that 50-day line for now.
For now is right. So we'll keep a close watch on that. Also, let's check in on the Dow, which had been definitely the outperforming index in this rally since October, but a pretty significant decline today. And the look of this chart, not quite as good as it was earlier in the week.
No, also just fiercely undercut those lows from last week. Interesting that the strong price performance from the Dow has resulted in this 50-day moving average that has started to swing nicely higher. It's crossing with the 200-day moving average here, so we'll see if the Dow makes a test of this this converged 50 and 200-day line, but with it. Index sharply below, last week's lows, you'd think a test could be coming up.
Right. A brief look at the Russell 2000 before we take a look at the 10-year yield. Also, some pretty stiff resistance around that 200-day line, and the Russell now undercutting the 50-day line and those recent lows as well. And it looks like where it closed today, getting pretty close, to where it was in early November. So continuing to see some further deterioration here. And Ken, we've been talking about, we see this trading range. Are we going to break higher? Are we going to break lower? This is a break lower. So could we be in for more pain from here?
Well, those early November lows that you pointed out are definitely worth watching. You can see looks like
It might space bar
okay.
there. I don't know what that.
Yeah, it looks like IWM is still holding above that low, not by much. So that is really, a support level to watch for the Russell 2000 is basically sitting right there. So, maybe we get a little relief rally tomorrow, but we'll be watching the volume in the small caps and the other indexes, just see if we can start to see some conviction behind this buying. But I think the indexes are clearly showing us that overhead supply is still an issue, and sellers are still out there in spades, unfortunately.
Yeah, exactly right. Okay, well, moving on to some tickers of interest like ITB. Actually, you know what? I said let's take a look at the 10-year Treasury yield. So why don't we go there first? So we're right back at those lows from a couple of sessions ago, below that 3.5% mark.
Yeah, bond yields down another 5 basis points today, so below that 3.5% level. So this is a story that's been going on for a while. Money flowing into bonds, knocking these yields lower. And like we've talked about, there was a time when the market didn't like these rising bond yields. Now the bond yields are falling. The market doesn't like that either, because the bond market is flagging a pretty harsh recession next year. It may or may not turn out to be that way. The other thing I'll say is that if our slowdown comes in the first and second quarter of next year, and maybe we start to see the light at the end of the tunnel in the second half of next year, remember that the market is always looking out 6 to 9 months in advance. So, we could, if the stock market is envisioning better times in the latter half of 2023, you would expect to see a rally, start, 6 to 9 months ahead of that. So before we get too bearish, just think that what the market is struggling with right now is if this recession is going to last more than a couple of quarters, if it's going to be long and drawn out. And that's what the market's grappling with right now. It remains to be seen, but I do follow the bond market closely, and in the past, when we've seen yields get crushed like this, it has preceded recessions in the past.
Well, thanks for being the bearer of such great news there, Kent. No, I mean, we're all thinking about it. Those recession fears are front and center right now. So thank you so much for adding color to that.
And earnings fears too. I mean, that sometimes gets lost in the shuffle.
Slowdown.
Yeah, because when you get this economic slowdown, and we've seen a lot of layoffs already announced by a lot of companies, CEOs being very very cautious. So we'll have to see. It's just tough environment right now. But
yeah. It really is. Okay, now let's take a look at ITB. We're seeing some signs of life in the home builder group. So an upside reversal here today for this ITB ETF, gaining 1% on the day, continuing this uptrend where we've seen some support right around that 21-day line after a big gap up on that November 10th day, where we really started seeing things kick into high gear. Meanwhile, underneath the surface in this group, we had earnings from Lennar and a big upside reversal here for this chart, which does pretty closely mirror what we are seeing for ITB.
Right. I think Lennar might be a little further gone than ITB. I mean, I like the fact that ITB is still holding in this 5% buy zone from that 61.11 pivot. So to me, it doesn't look extremely extended here. But you mentioned, ITB, Lennar as a top holding. They had earnings last night, and the numbers were okay. They talked about higher mortgage rates impacting demand, but the market might be just kind of looking forward, 6 to 9 months out, and thinking this low interest rate environment is ultimately going to be good for the home builders. But the market's often very counterintuitive because we're so worried about a slowdown next year. Why would the home builders be rallying? But maybe it's a tell that interest rates are going to stay low for a period of time, and that could fuel renewed mortgage demand. We'll see.
Okay, and next on our list, let's take a look at Impinj, ticker PI here. It's been a strong stock in the chip space, but as you mentioned in the opening comments, Ken, chip stocks got hit pretty hard today, including Impinj, down over 7% in heavy volume.
Yeah, broad-based weakness. Remember, this company had a very, very good earnings report. That's when it gapped up above the 100 level. Definitely showed relative strength. And I have to tell you that even though there were some, sellers in the stock today, and volume did pick up the pace from Wednesday, it's still holding the 50-day line here, and it's just a good one for the watch list because this is a strong enough stock with the fundamental picture is exceptional that wouldn't be surprised to see it find support at the 50-day moving average. If it does, again, you want to see just some semblance of conviction. You want to see a little bit of volume when a stock finds support. When we switch over to the weekly chart and look at where the stock is in relation to its 10-week moving average, it's really just kind of making that test right now. So like I mentioned on IBD Live this morning, when a stock on the weekly chart is coming down to its 10-week moving average, again, with the stock near its weekly low here, we need to really see more signs of support. It's holding it right now, but maybe tomorrow we'll get a weekly close nicely off lows, and Impinj will make a case for support at the 10-week line. Haven't given up on this one yet. I think it's one of the top chip stocks to watch for sure.
Yeah, I mean, with the growth stocks that we have seen reveal themselves as standouts in the current market, with a backdrop of growth by and large being a disappointment this year, but you have some of these bright spots here, some stocks in the chip space, some solar stocks for the most part, maybe not today, but also definitely popping up to the top of our watch lists with their strong performances. Also, a lot of biotech and medical stocks that I know you've been tracking. It seems like we're at a critical moment here, Ken. If the market does continue to deteriorate, either these stocks are going to hold up and really flex that leadership, or they're going to start breaking down.
Yeah, the sentiment was weak in the chip sector today. Not only was Nvidia downgraded, but Western Digital, WDC, they got a sell rating from Goldman Sachs, and Western Digital is in, you can see their hard solid state disk drives, memory storage, just like Micron Technology, which is going to report earnings next week. But they've talked in recent weeks about softening demand for memory chips. So sentiment was weak after a couple of big names in the tech sector got downgraded. But chip stocks again. There are some. PI is a solid name here, and even Avago still not Avago, Broadcom, ticker AVGO, is another stock worth watching here. Several up weeks in a row, still holding above that 40-week moving average. So there's still some pockets of strength here, but again, the environment is just so bad for technology stocks in general. The chip stocks are going to get pull down, when the market is weak like it was today.
Yeah. So will Impinj's test of the 10-week line be a success, or will it be a decisive break? We'll have to see what tomorrow and the rest of the year brings for it. And speaking of strength in the medical sector, let's take a look at Cardinal Health, CAH, working on a pretty tight base here near highs.
Yeah, we had this on leaderboard for a little while. Took a nice gain in it, and really just impressed with how this is trading. The daily chart, doesn't really have the look of a flat base. I mean, it's kind of an odd shape, but it is, and it's holding support at its 50-day moving average. You look at the weekly chart, you can see it a little better. Holding gains above the 10-week moving average, and this stock is still up near highs with a relative strength line near highs. Drug distributors typically a pretty defensive industry, fairly stable track record of growth. So watching Cardinal Health as well, definitely a defensive area of the market, but still boasting a pretty good technical picture here.
That it is. All right. Well, thank you so much, Ken. And thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live, where we will be joined by special guest Arusha Pieris. He's our weekly special guest on the Investing with IBD podcast and a portfolio manager at O'Neill Global Advisors.
Haven't heard from Arusha in a while.
No,
Yeah,
we haven't heard from him in a while. So it'll be really interesting to see and get his take on where things stand and how he's been handling the current market. So we'll see you there tomorrow on IBD Live. It's going to be a jam-packed day because we also have Barron's Live happening at noon Eastern, where IBD Chief Content Officer Chris Gessel and I will be talking at noon Eastern over on Barron's to talk about how to outperform in 2023. If you want to beat the market, we've got some keys to success for that and some lessons for active investors. And then coming up on Trader Tales, I've got Evan Medeiros of theTradeRisk.com. That's at 5 p.m. Eastern. We're going to have a fun conversation to wrap up the year. So looking forward to that, spending the day with you all. It'll be a fun one. So thanks in advance for tuning in. We'll see you there bright and early, starting with IBD Live.